Hooty hoo, all my stock market gamblers. Welcome today. It's Thursday, the day after Fed Day. Now, we're going to talk a little bit about what Fed Chairman Powell came out and said today. But first, let's talk about the markets. The Dow it was up 200, up still about 100, but it's pulling back. The NASDAQ, however, is down a couple hundred points. It started off higher and it's come back in. Okay, so we had that big rally yesterday when the Fed Chairman came out and basically they said they're going to double the taper. They're going to increase the amount of taper. Now, to me, this is very fascinating. What you got is inflation running away, right? So we got the CPI running about 6.8%, but we got the PPI, which is the wholesale price index, running at 9.6%, almost 10%. So inflation's running away. Well, basically, you got the Federal Reserve, they're pouring gasoline on the fire, right? They're kind of like the arsonist, the one that's lighting up the fire. But then you get the Fed President Powell, he comes out and he's acting like he's the fire chief. He's acting like he's going to put out the inflation fire. Look, the Federal Reserve is the one that's causing the inflation, and yet Powell comes out and says he's got all these tools that are going to deal with it. Well, President Powell, you got to do something quick. Inflation's running away. So what's he going to do? He's going to double the taper. He's going to reduce it by another 15 billion, from 15 billion down to 30 billion down. But keep in mind, they're still spending $90 billion a month, and that's just the minimum. They can spend any amount they want, but they're tapering the minimum. So they're really not doing anything. Look, you got to cut the taper, just flat out stop spending money, stop buying assets. Stop pouring the gasoline onto the inflation fire. Look, you got to start raising interest rates. Now, they did come out and they said, hey, we want a soft landing, so we're going to only raise rates 3 times in 2022. And they're going to bump it up a quarter point each time. This is going to do absolutely nothing to the inflation fire. Inflation's running 10%. You got to start jacking those rates up, and you got to do it a lot more than a quarter of a point. It's crazy what's going on. It's just, I just don't get it. But anyway, so here we got the mainstream media, the talking heads. They say that the market, it's applauding. It's applauding this new hockey stance of the Fed. I'm not seeing a hockey stance, number one. I'm still seeing this dub out there flying around. Look, I don't think the market is applauding it. I don't think the markets realize what has to be done in order to stop the runaway inflation. They got to stop the purchases, stop the buybacks, and raise interest rates. And I'm not talking 0.25%. I'm talking 3, 4, 5, 6%. They're going to have to do it. But they can't do it. Why can't they do it? Because the government would default on its debt. I mean, you would see just a crash in the stock market like you've never seen before. So they're going to let this inflation run away. They're going to try to inflate their way out of this mess. We're at 10% inflation, and we're going a lot higher on that inflation number. It's ridiculous what they're doing. It is pathetic. You just can't make this stuff up. Now, that's my complaint for the day. So let's get back to the markets. Now, I see the market in a topping process. All right, a lot of people are calling for a Santa Claus rally. Now, Santa Claus rallies happen about 7 out of 10 times. We get this little Santa Claus rally into the end of the year. Now, I'm not so sure that's going to happen this year. I think we're going to get more like maybe a Christmas crash. It's scary what's happening. We're definitely in a topping process of the stock market. Now let's talk about that a little bit. Okay, so you got the NASDAQ. The NASDAQ, we're up 17% year to date. Okay, that's a good year, right? Almost 20%. But if you take out the top 5 stocks of the NASDAQ 100, take out the top 5 stocks, you would have the NASDAQ actually down 22% for the year. That's a bad year. So the only thing holding it up is these 5 top stocks. Now, the S&P 500, it's not quite as bad, but it's almost, it's almost mirroring. The S&P's doing much better. It's up 33% year to date. 33%. But, there's 5 stocks out of those 500 stocks that are responsible for that half of the gain. 5 stocks responsible for half of the gain. So This is not a healthy market is what I'm trying to tell you. A lot of stocks have already started to crash. And these last 5 stocks that are holding it up, I think they'll give way also. That's my opinion, just an opinion. Now, okay, I look at the VIX. Now, the VIX is here at 19. Now, it's still above the 50-day moving average. Now, as long as it's above the 50-day moving average, well, bad things happen. Bad things happen to the stock market when you're above the 50-day moving average with the VIX. And if you look at the options on the VIX, the options, look at it. It's at 19 right now, right? So if you look 2 weeks out, you can tell, like, a call option is about $4, where a put option is only about $1. There is odds of 4 to 1 that the VIX is going to be higher 2 weeks from now. That's what the options are telling us. Now, when the VIX goes higher, the market comes down. I'm still calling for a 10 to 15% correction. Are we going to get that in December, or are we going to wait till January? This could be the Christmas correction coming, a Christmas crash, if you will, 10 to 15% only. I don't think this is the big crash. The big crash doesn't happen until Jerome Powell really comes after the inflation, till he starts to bump up the interest rates to 5 or 6%. Then you're going to get this massive crash. Massive. I mean, we're talking 80, 90%. But not till he's not even going to start raising interest rate probably till, I don't know, March, April, May, somewhere in that time frame. So we still have like 3, 4, 5 months where we can hit new high. Yeah, I think we're going to pull back in, but I do think we're going to bounce eventually and go hit that new high. That's just my opinion. Now, what did I do today? I bought some puts on the NASDAQ, and those puts are already performing well. I bought it when the NASDAQ was positive. NASDAQ's already down almost 300 points just today. But I think the NASDAQ is going to lead the market lower. I believe that. I think some of these big stocks like Apple Computer holding it up. I think Apple Computer is going to come in, trading around 175 right now. I wouldn't be surprised to see that around 160, maybe even 150. And, that's not a huge drop, 175 to 160. Mike, what's the big deal? It's not a big deal. I'm just saying we're going to get a correction, a Christmas correction, a Christmas crash, if you will, down to 10 to 15% on that NASDAQ. And I'm starting to play it out here. Now, I was wishing for a bigger run-up. We had that good run-up yesterday, right? We were down several hundred points, and then the Fed announcement came, and then it just took off, and we closed much higher. But we're really in this sideways pattern. We're kind of a tug of war between the bulls and the bears. Look, we had a 2-day pull down, and then yesterday we recovered all of that. And today we're the bulls and bears that are fighting it out. The Dow has the bulls, the NASDAQ has the bears. I think the whole market is due for a correction. It's overdue. We haven't had one all year. I mean, it's been a good year, right? Okay, I don't think 2022 is going to play out so well. I think we're going to get this correction coming right now within the next couple weeks. I'd see a correction, 10, 15% is all, but then I do see the big crash coming when the Fed starts to realize that inflation is not a joke, that they got to do something. They got to do something fast, and they will start increasing the interest rates. Okay, that's where the big crash comes in, because there's no way the market can sustain interest rates increasing. That goes for the stock market. That goes for the real estate market. Both of them are going to be coming down together, and that's unusual. One usually holds up the other, but this time it's going to be a lot of pain, and I hate to say that for the U.S. I think we're going to have a very tough year in 2022, but we'll see how that all plays out. But right now, I've got a few puts on a small, it's a little position, not a big position. I was hoping that the market would jump up higher, and then I'd put a big position on, because I'm betting against this. This Christmas rally, it still can happen. It's not out of the question. I mean, we're still kind of, just going sideways in this market. And if we get that rally, I'm going to be selling into it. I'm going to be buying puts. I don't believe that rally is going to hold. I do believe we're going to get the correction. And we'll see. We'll see if I'm right. That's just my opinion. I'm a stock market gambler. If you like this stuff, give me that thumbs up. You really like it. Punch that subscribe button so we can talk again soon. Bye-bye now.